Mic check. Mic's good. Welcome to the channel. This is Reliable Rudy. Before we get into any live trading, live stock market analysis, you guys know I'm not a licensed financial advisor. Just sharing my opinion and giving you guys some entertainment. So we got for the title, we have FVRR. Getting a nice bid off the open, gaps up, nice green candle through the highs. All I have with this one is a couple entries off 26. If you guys remember, we traded it back here, had some trims into the downtrend, and a couple reloads in this consolidation. Now kind of starting to get some stair-step action. So I'm not opposed to averaging up above 26. I got an alert set in at 26.60 right now. But I probably did just get triggered on some shares, and we got triggered in on some shares for SOUN here at this 450. We're going to see if this previous top has any uh, support that it can build. I don't like that, the volume is decreasing on this candle, but a large red engulfing candle. Is this going to be a short-term top? Do we need to retrace back down to the trend line? I wasn't sure if it would get there, but maybe it needs to just trade sideways, and 420 is a level that it can build off of. Looking at the daily, this is day number 3, and when it was showing that green candle, it wasn't a half bad look, but I could see the catalyst for maybe having to retest back down to these mid to low 4s. And you can see the previous wicks over here, which would be that sort of retest, hold the support, and see if it can start turning up. Uh, but you guys know I've traded SOUN a few times. It's had a pretty legitimate trend line. It gave some nice pops, and now it's kind of testing this sort of flat top right here, where maybe it needs some time before it can break over top and really claim that 5. But if it can get over 5, I think this is going to be a really good trade. So trying to get an early entry at 450 is kind of what I'm trying to do. But it's kind of giving that up right now, so maybe I just go ahead and put a stop in at like 44s. But that is that previous high. Maybe I give it to the bottom of this wick. We'll go ahead and put one in at 40s. Trying the wick into that, so we're going to give that 50 order 10 cents to move. And now it's holding those 50s, so I am going to go ahead and put this stop in, and if it stops me out, it stops me out. I think it's impossible for this name to end up turning green on me as much as we've traded in and out of it. So we're just going to get the stop in, that way I don't have to, I can look back if need be. We went in at 42s. 42s, and we'll see how that goes. So back to FVRR. Yeah, it has the increased volume, decreased volume, wick top, couple wick tops. Let's see how it acts. If it can get back into this 26.50, maybe there is a trade to be made there. Moving on to the remainder of the title, we're still in this AI on that 34 break. I do think it has a legitimate catalyst for a potential uptrend. And it's sitting right around these 36 halves, and we have respected the gap on this one. So we got fills, plenty of fills on the name, and our best fill I think was a 38.11 print. So we're thinking about potentially reloading around this trend line. If it can start catching a bid, this is going to be a 37 break. If it gets back over 37, there's catalyst that, maybe we can run to the top end of the channel again. So let's watch it right here. Let's see if it gets any action off this sort of trend line. It would be the third point of contact. There's probably multiple ways you could set this where, this could be the trend line, but it doesn't really get much action. It gives up. Now that this one has actually taken out one of these highs right here, so if I just mark this previous high, you see we gap up above that, wicks through the gap, buyers are there. Now if it can build this sort of U shape, But that also could be a catalyst. Maybe it catches a bid, rejects 37, and gives up this trend line where our out for the position is probably going to be 36. But then there's another catalyst is that you have this gap here at 35.90. So turning green for now. We could try and dip into a little bit if we wanted to, but let's go ahead and move on. We have also Key. We dipped into some Key Corp. I thought it was a reasonable setup around this sort of 950 break. Not the most amount of size, but I didn't even know that it was sort of kind of making a run. But looking at the daily chart, it's been trading sideways for a while. So it was either going to, it's like, okay, this is nut up or shut up. We're either going to break down and try and test. It looks like we have a gap that's almost filled. Maybe it is filled. Yeah, on the money. So maybe it needed to pull back to a 9. But we had tried Key over on one of these days, and it failed this sort of trend line. So just trying to find an early entry. We think that it's possible that uh, it's trying to build some sort of higher low. If it can do that, I think it's possible that it could be run up to the gap fill if you're lucky. So that's a pretty good increase trying to find an early entry at a 950 break. Some respectable levels on the way up. I could start trimming this name, but like I said, I don't have much size. So maybe at 75s we can start. Another name that we've dipped into a little bit is that end phase, and we did that on the middle of the week over here. I think it was around 160, so not really the bottom end, but just kind of respecting this uptrend channel right here. But I'm also okay trying to dip into this before the earnings report, because that is the bread and butter for this name, is the compounded growth that they've had quarter after quarter. You can kind of see the setup for maybe a potential neckline break. If it were to get over 190, which is also your previous lows over here, that's also a catalyst, so maybe push up for 220s. And then another name is also the plug. We're still sitting in the plug from last week. We get the gap up and we were buyers on this pullback as it came down to the gap. We never bought 10 flat. But we do have multiple entries on this name and multiple trims on this name. We never got our 1090. So all I did when I seen that it was starting to run, we were trimming up through this green candle as I was making it. Here's your retracement, and all we did is said, okay, our 702 is at 1093. Let's go on the ask at 90s, and 89s is the high. And I never did get that fill. So we're on the ask at 90s and plug with a nice green candle move and a nice positive hold on increased volume. If this wants to take out these highs right here, I think it's entirely possible that we can get a move into even some of these lows over here, because this is going to be that 702. So if it starts breaking out above that high, which you can see is your 382, okay, 13 is reasonable. And your 702 and 618 are right in there. This gaps down, fills the gap, continuation to the downside. There's probably some sort of trend line here and some sort of channel that you can see like that. So if it can start following that channel, that's what we're going to be looking for. Rivian, yeah, I know those EVs are really going right now. I've been keeping an eye on Rivian. I was if it wasn't last week, we had this marked as a breakout beforehand, and it put a nice green candle through it. I never really got my eyes on it, but then it gets the gap up. Here was the day, really good entries at this sort of breaking over top of this flat top right there. So now you get the gap up. Now we're up at 9. The only problem I had when I looked at it this morning is it filled this gap right there. So I really don't. But now that it's filled, if it can really get going, I think there's possible chance that it really could get going. But if we look at the retracement, we're also putting the first candles into this retracement from this drop. So yeah, it might just need some more time. Let's go to a 15-minute chart though. Nice volume increase. If it gets some consolidation, it can hold 1850s. And here's your wick through the gaps. So if it can reclaim 19 or hold 19s, it looks pretty good. And I'd say over top of these highs is more of your true breakout, where you got an entry down here, and then if you're lucky enough, you get a breakout up here. You could be getting some sells into these previous lows over here. Hold support, flat bottom break, and then it tests it on the way down too. So I like these little areas when you're looking for potential extensions. So even if you took the trade at 22s, I do think it's possible that you could get a nice 20% move. But down here, obviously the return is going to be better. I don't know. I'd like to see a little bit more early of an entry. You see how my strength is way up here, so I'd already be looking at it as like a continuation play, if that makes sense. Uh, well, we are going to go look back at that SOUN and see if that's catching a bid for us, and still holding these 450s. So I mean, we do think it's possible that this could be something. And this is, you know, when is it going to give up? And when it does give up, I really like this 350 to 325. So we're okay if this ends up stopping us out, actually. And it looks like it's probably going to try to. I could lower the stop, but, I'm okay if it just stops me out. We got a couple things working for us. And let's just go look at the top movers for the day. There's quite a few tickers that I added. I will hold this longer and see what happens. If for Rivian, yeah, I would say what dictates me holding something is basically the entry. Depending on the entry is going to determine how much I'm willing to hold it. So we are going to keep an eye on key. This is continuing that nice green move, nice green engulfing candle right here. So let's see if this can maybe get up to 75s. Maybe we can think about putting an order in there. What else? We had all kinds of tickers that we threw on the list today. I think we can take a look at Zim. Yeah, a lot of red volume right there. At one point in time during this candle, this was a green candle sitting at 13, and it had that increased volume. Well, this looks a little bit scary to me, and I just think there's something a little fishy with that company as well. But FVRR, second candle, trying to pull back. Can it retest this 2660? Maybe I move this alert up just a little bit so it can alert me. But this is one that I may be interested. The chart setup, probably not the greatest setup. It's inside of a downtrend. But I like this nice curl. And if this can give me a positive break, I would say probably a 30 break is what it's going to be. And I think it's very possible that we can get that push up into the 40s. So, and if it does give a push up in the 40s, that it's a breakout away from maybe pushing up to these previous lows. So, I mean, we're talking about early entries down here. I think it's entirely possible that I can give a move like that. So that's what we're watching with FVR, and that's kind of why we're dipping into it against strength right here. High margin, fell off a cliff. It's still been able to hold growth, but it doesn't have much debt. They're free cash flow positive, not there profit-wise, but that's what we're looking at with that one. Another one that we were watching was a trend line. We were hoping for it to come on in. This is Halo. Positive break came in a couple weeks ago, but it was a nice flat top break that it had on Friday. So we were looking for it to come on into 35s. Well, it gaps down originally and just puts in a nice green move here. So Halo is one that I am gonna keep my eyes on if need be. There was quite a few tickers that we added. Trying to think of what they were. I was also looking at DocuSign. DocuSign a little bit more expensive, but this trend line was something that I noticed over the weekend, and we put this trend line in, and we were hoping that it could come back into this kind of 50 flat, and it kind of met up around that 50 flat. But now a green candle going through there. It would have been nice if this just pulled back one more time before it wanted to start. So we're going to keep this one on watch. Strength is very close to that middle ground as well. Veil is another one that we should probably keep on watch. It's been in this tight wedge pattern, not tight, actually long, a wide wedge pattern. So maybe this needs to sit in this wedge pattern for some time, but I would still like to be a buyer on this bottom end, in my opinion. But gives you the gap up. We've been waiting for this gap for quite some time. As we talked about that 1250 range over and over again. Excuse me. But uh, kind of showing you early signs of kind of a fan pattern as well. Whether that's accurate or not. Early signs of a fan pattern. If it were to wick up into this gap, I think that it can get rejected. Maybe 1340 is reasonable. Let's go look back at SOUN. Still trying to hold, but it doesn't look like it's going to. We are in the next candle. Doesn't look like it's going to be able to hold, and here it's going to go and stop us out. So that was a new trade for today. Looks like the entries for some stuff was just better for me from Friday. But we'll keep our focus on plug. This is the name that we've been trimming. And we can keep an eye on Rivian for you. Looks like it's holding these 19s. TMC continues to churn up. This was one that we talked about many times through this move. We noticed that this volume was increasing down here in the 70s. We've seen the one break, we've seen the one hold, we've seen the one get taken out. And then these 130s is where we played it a couple times. Had we just, held the strong move with the volume, the beautiful chart setup, we'd be getting paid right now. So sometimes just hold the move. We should go take a look back at AI. AI is still holding these 3650s. You can see the strength is still there, but it's been wicking and sort of putting these indecision candles as it's moved up the last few days. You can see the channel wasn't perfectly set, but in a way, channel is something like that. So if it starts to roll over, we could try this right here as it's trying to fight. Two red candle moves with a wick into the middle of that red candle, and that wick also meets in at the body of that open. So it's going to have to break this sort of channel to the downside, but this is where that trend line could hold. It's holding at this red to green, or green to red right there. There's the gap up, fills the gap. Trying to hold 3650s still. We're also keeping an eye on you. We like this 2250 support right here. And if it does go against us, we got a gap fill at 21. So a couple different levels right here. But even if that gap fill at 21, this could be a 3 area play where it's got some nice support in right here. Nice compounder. Moderna was also right around that decent support level range. Not the greatest, but we were keeping an eye on Moderna. You can see it's bounced off this area. COSM, that reminds me of COSM. Right around this 3 has been a pretty big level for this name. So if that were to start catching bid, I mean, the chart setup is there. It's bounced off this 3 every single time. Until it doesn't. So keep that in mind. Just because it bounces there, it gets underneath 3 a few times, but when it doesn't bounce and it gives you a gap below this support, a lot of room to the downside. So I have your outs, of course. Of course, PayPal has continued to follow this channel. We've talked about PayPal many times. I think Warner Brothers chart is reasonable as well. Kind of gave you this expanding little cone right here, but it is a descending channel. Nothing denying that. But when we did retrace back down, you had buyers off this top, which also was a gap fill. And then it started this sort of channel look right here. And on this move up, oops. On that move up right to that 702, I love looking at that. And now putting in a higher low after rejecting this sort of downtrend. So that is, and getting a fresh positive break today, that should be noted. CF was also on the outside of this sort of descending channel right here and started to stray away from it a little bit. But is the channel set perfectly is the question. Does it need to follow it? Is it going to be able to hold on top of it? This is where I would say, on a fresh positive break, catching a green candle on the day, if it were to get over top of 7150s, I think there's a legitimate case that it could get up to 80s. Checkpoint software is is another play that we've been looking at. Has the earnings coming up? I think it's possible that you could be trying to build some sort of channel right here. So if it pulled back into like these low 120s, I think that's a possible play as well. We should go back to AI though, because this could easily get going here. And you can see the candle it's starting to put in. Not a lot of volume, still probably inside of this channel. But if it gives like a push up to this 37 and then comes back in the 50s, I do think that this trend line could hold. We can look back at plug. And giving that test, so it looks like we are going to get that 1090 fill. So not quite there yet, but I'd be surprised if I don't get this 1090 fill right here. Strong chart setup, nice volume increase. The red candle getting smaller on decreased volume. And 6 minutes left in this candle, a decent amount of volume coming in as long as it doesn't wick back down quick and come into like low 70s. And there's 90s. We'll see if we get the print, and we do get the print on 90, so probably going to give a nice green candle move. The next area that we're going to be looking for is, maybe these tops like an 11 break, like up to 1120 is going to be that next area that we're looking for. Rivian putting in a green candle. Not quite at that breakout yet, but it looks like we're going to attempt for it. One red candle, indecision candle, now putting in a nice green candle move. Key Corp wicked up towards those 70s. Man, that is always just a big kick in the where. It's possible we didn't get stopped out. Had I stayed true to those 40s instead of 42, it looks like the 42's filled. Man, that is tough. On the penny. Sometimes that's how trading goes. If I would have just gave it the 10 cents, maybe it doesn't stop me out. But this is where I was saying that previous high. And now 50's holding, so if this wanted to start going, possibly SOUN could get catch a bid and test up these 75s again. Would it be able to break it with it moving down like this? Maybe not, but it still would be a nice move from the 40s. Already 10 pennies in the money off those lows. And Zim, that increased red volume, always a little scary. And plug getting rejected, so we got the 90 fill, which is all we wanted. And we will sit back and hold. We can see that halo coming back in, retest of this high right here. Is there something worth it? It doesn't have the most amount of volume, but I do think that this play has a legitimate catalyst for maybe a push higher. But you do have the ascending channel like this. It doesn't reach it right here, which it's trying to fight this flat top, and now that it's really got it, this could catch a bid up to these tops over here. And you do have a gap fill, couple gaps that you could worry about over here. So even from the move that's had today, 6, 8, 15, not terrible. Not really doing nothing. EDR. We are looking for this Endeavor play to give some sort of pullback into these 23s as close as it can get to this sort of flat top and the gap fill. I think the closer it gets to that, the better off you're going to be. The one problem I'd say with Rivian is that it is a nice tight sideways consolidation, but if it got underneath of the wick at the low of this candle, would it put a red candle down and then start a chain reaction to the downside? I just need a little bit more information, I think. With Rivian, it's not a terrible setup at all. If it holds these 19s, it could easily catch a bid up to these 22 halves, very easily. Let's go take a look at a few others. Not much volume on the open of today, but notable. You can see this sort of trend line that we have marked right here and potential channel. You can see AI still holding 3650s for now, just briefly holding it. But this one, if it pulled into like these low 60s, I think this trend line is reasonable, and it did gap up, filled this gap with a nice wick candle, and now trying to hold these 65s, which is also right around this sort of flat top break that it had, where when it broke it, 3 candles of consolidation before it gaps up, retraces all the ways down, tries to get to that flat top. So an AI giving up 50s for right now. We can go take a look back at plug, and a nice rejection. So we were able to get the fill on plug and kind of giving that false break for now. Volume did increase, but you have some selling pressure in there, not all buying. FVRR, continuing this. A minute left in this candle. It tried to turn green on this candle. If it can sort of hold this area, maybe it needs a couple more candles to the downside, where this 2650 does not look half bad. RNG was a new one we added to the list. Nice volume increase right here. And looking at the daily, we do think it's potential start of a channel. So if it came back into these highs, which is what it already did once, this 30 hold could be the start of some sort of channel. Something like that starting to build potentially. Other than that, I mean that's what we're watching, guys. We're gonna continue respecting plug. Maybe we can try an attempt to reload. If this candle ended up turning red around at 10:50, the candle itself, we're not gonna have much time on the date with the market closing at 12. So my goal isn't to find the entries uh, when you feel rushed to find the entry. Most of the entries I'm talking about are actually entries that we got last week. We were talking about FVRR of 26 flat. We were talking about that before I had that vacation week. So we're just kind of just analyzing. You know, some of these EV plays are really moving. Okay, that's fine, but I'm not really trying to chase the move. When looking at the chart, I mean, you can see that the entry. I mean, there was plenty of opportunity to try building out this position. You have these lows that it comes into. You had some sort of trend line, and you had a flat top that it was setting up right here, and you had 2 days to trade that flat top. Now when it gives a gap up and it's sitting up here near 19s, I think the entry is already $3 in the money. So I'm going to give it some time. If it pulls back in and tries to fill this gap at 1670, I think that's an area where I could try it. But a lot of movers on this shortened down day. And we can go take a look back at AI. AI gave up those 50s. So this is where I'm put into question of, I could try it off the gap. Maybe the trend line is something like this, or, that's a legitimate case. And then you have this gap fill kind of right off that trend line. The only problem is this is kind of that cone formation where does it give you one last push up into these resistance level up here at 39, and we know 40 was a flat top when it broke out over here. So I mean, reasonable area for this to maybe extend for. And here it's giving up the ghost. We could try it off 36s if we wanted to. 35.92. Too much red engulfing into this level for me to say, oh yeah, this is a sure thing. But we could run a hard stop underneath 35s and just take the win on the position. Wicking into 36, I think that this is a reasonable setup. It does have that gap. That area was a breakout level. Retesting, if I just marked over these highs, that's where we're at right now. You can see wick into it, reject, reject, gap over. Now does it hold as support? We're here at 36s now, so we can keep watching it. Etsy was a new one that we added to the list as well. Looking at the daily chart, is it a perfectly set trend line? We think that's possible, that this could be setting up some sort of support right here, high or low. If this was for an eventual breakout, the breakout level is at 150. So if this started to give a curl, maybe a 90 break is what we're looking for. But it does have a gap fill that we could test the waters in on it, and that just so happens to be right around 82 flat. So that was another one that we were watching, but you can see this curl starting to come in. If we just clear out everything, you can see it rejecting the level in ZI crossing, giving us an alert. Let's take a look. ZI, clear downtrend, gives a nice move through some levels. 1, 2, 3, 4, 5. Looks like a wave structure. Could be some sort of ABC structure that's coming in. Holding positive strength, not a lot of volume. And it does have a gap up from 24. Maybe there's something there if this were to come in 24. I did have that alert in, so let's go take a look. It has two nice green candles, but this indecision candle gets that increased red volume, and really not that much volume coming into this ticker. But it is testing that previous high, so maybe something could be due here. We can watch this and see how it acts. Kazim giving a nice green move off of that test of 3. Tested it through last week, acted like it was going to break down. Now already 12 pennies in the money on any orders off 3. Legitimate green candle that came in. If this ended up giving some sort of positive break and was some sort of retracement pattern, easily could run up to 370. Not a bad return. SOUN giving up 450s. More than likely not something there. Match was another one that we added to the watch list, but we are aware of this sort of downtrend that's had, but decent support level down here in these low 30s, so we added it. I do think this halo setup is reasonable. Extended a little bit, but a lot closer. Gap free move to the upside. We look at the 15-minute chart. Testing these highs right here. Is there a catalyst for this to be some sort of trend line? Potentially. Maybe it needs to give a move down further. Maybe it does. Bumble was a new one that we added. Bumble. But actually given a nice U. Mark this as some sort of descending channel, whether that's set perfectly or not, but it hasn't really gotten to the bottom end of it. If this was where that channel needed to be, could easily come back in. But you look at the earnings, really not far off of profitability. Right there, big miss, but they do have quarters of profitability. And looking at the revenue, 220 and projected 256, so there is some growth. And it's been beaten up pretty good. High margin company. One that we are watching for sure. Look back at Key Corp. Nice green candle. I like this area that we dipped into it at that 950 break. I'm glad that I did, and I'm not probably even gonna cut any if it closes above 950. But let's go look back at the AI, because the AI trade, 36s did give up no action whatsoever, and that gap is filled now. So I think we are going to try and dip into a little bit and maybe give it like these wick bottoms right here. We can give it underneath of it all. Keeps everything as a green trade, and if it catches a bid, then maybe we can continue holding it for a higher move. But I will say that the entry means everything on this name. Because you look at the daily, you can see the red candles coming in, giving you this sort of frowny face, early start of it, giving you the curl. It made the run up to the gap. Does it have the strength to kind of hold? It's a tough one to say. It does have some good support in down there at that 34, potentially just off that high. Yeah, I shouldn't say that's good support. And not much action off that gap, which is the alarming part. We might just put a stop, and if it stops us out as a green trade, then it stops us out as a green trade. Go take a look back at FVRR, wicked into those 75s. We got the alert at 73s. Can it get down to this sort of flat top setup right here? The NASDAQ just turned red, surprisingly. Oil still holding green, couple commodities in the green. Rivian gave up that 19, so this is sort of what I was talking about. Even though it was a nice sideways chop and this candle was turning green, what happens when it takes out this 19 and in particular this wick low, get this nice red candle into the middle of this green move? Is this the start of one? Is it opportunity to buy in the middle of this green candle and eventually take out this high? If it's able to do that, I mean, this could easily get going. Wicking in the 1850s right now, but doesn't need to retrace back down to 1670s or into the 16s. Possibly it does. So one that we're just going to keep our eye on. You know, if it runs against us, it runs. Or if it runs to the upside and we don't have the entry, you know, so be it. You can't get every single trade. And just because someone, you know, maybe you know somebody that has the trade and they're talking about it and you want a piece of it, you know, there's thousands and thousands of tickers that you can trade. And I mean, just look at the watch list. Look at all the 5% movers. We got all kinds of movement in the market. And today's a shortened day. You know, RBLX actually has what I would say probably a cleaner setup. It's built this flat top here at 43s. You have a gap fill extension up at 45. Let's go look at the daily chart here. So you can see the flat top setting up right there. Your positive strength putting in a green candle, it gapped up, holding the level. You can see the wedge pattern. Doesn't need to be a wedge pattern. Doesn't need to come in the 39s, test up 43s. But that gap, it's not a bad little pop right there. 10% move. Another flat top that we added to the watch list is in mode. You know, Dish, when we were talking about this down at this 650, we were talking about it over here at this 650 when it had that volume increase. End phase continuing to hold this green candle. I don't know if you're still there, Kramer, but that med play, given that nice extension continuation play. But we talked about med multiple times in this descending channel. We were talking about these gap fills down here. Just never gave us that entry. That's a damn shame. DocuSign starting the wick, show a little bit of resistance, so that's what we want to see. We want to see this come down in the 50 range. DocuSign gets to 50, we're all over that. In particular, you can just mark this top right there at 50.40 as what we're going to be watching for. PLM actually holding a green candle. Not a terrible setup, but if it gave up 190. Watch out below. I shouldn't say that. It could easily hold near this 185 and just trade sideways. Very well could. STA. Disney actually held up those upper 80s pretty well. Disney actually given a nice bullish chart. If this is the start of something, could easily see this up mid 90s. Early break of a 90 right here. Doesn't look half bad. Increased volume to start the day. Here's the opening candle. Gaps down, put the green candle in hold, and now taking out the tops on 3 candle move. The candles are getting smaller, but look at the daily chart. That's a nice trend line. Third point of contact, holding and breaking over the top of this sort of neckline right here. So you can see the catalyst, you can see the downtrend it's been in, but you can see the support that it's trading at. You know, this is support from 2014. Don't get it twisted. You know, Disney isn't really the same company that it was. You know, financial wise, they're not really near the same margins that they were at, but all in all, it's still got a pretty legitimate chart set up, so. Looking back over at SOUN, it's still holding this 450s right here. You know, honestly, anything above, 4 could easily catch a bid. It's just about, does it come in the 4 and is there a better buying window for it? But into like 420s, that would be a pretty decent chart setup. Wick of selling, wick of buying. Go into the 15, and you can see we're right here at this 26.75. Do we need to pull into 26.50 is where we're looking for it. If it can do that, we'll average up on it. And Halo, putting in a green candle. Given a decent range for this sort of downtrend into the uptrend. That is what we're looking for right there. Let's look at a couple others. Go back to that ZI and see wicking into that. It was a nice red candle into that 26, and 26 is trying to hold here. Let's look at the daily chart. We might try something with this. The only thing that's scaring me from this is this 24 gap. If it didn't have that, I would be inclined to maybe take it, but if this pulled back into 24 halves, and this was the start of some sort of trend line, that's what we're looking for. You down 1%. This is what I wanted to see. I wanted to see you get rejected. I want to see this come back in, attempt to fill this 2260 gap, and then we can play around with this 2250 support and see if it wants to continue bouncing off that level. We look back at plug, we haven't looked at that in a minute. All the ways back down to 1050. So this is why we wanted to continue trimming this name. So looking at the original orders, we can go see what we did to start the day. And we started at 1051, then 1060, then 1069, then 1090, and then a 1081. So all in all, we're right back into some original orders. And probably some sort of trend line. So off this gap at 1040, we can think about trying to reload this. You can see the trend line. If it wants to give some sort of continuation, if it wants to crack, maybe it needs to pull back into the longer term trend line. But you can see the ascending channel. If it wants to pull back in and give us a move up to like 1250, we think there's a lot of potential move that we could be missing out on. So keeping the positioning, the sizing in line. And I think it goes without saying, some of these tobacco names have been pretty strong. MO actually retraced all the ways up to the dividend gap. That's always a good sign. Because now anybody who collected that dividend and bought security and reinvested into the security is actually in the money if it can break over top of that. But a nice U shape, nice hold of the trend line. And BTI given also a 1% move. Tried to run up to the gap, but wasn't able to. You guys know I've talked about these tobacco names a few times. Once or twice. We can look back at AI. If AI is just way down, we're just going to go over and cut the position. But still trying to hold these 36s. This is why I think there could be something here. But all in all, it's going to have to break through 3620s. If it trades sideways long enough, though, this is where this could be some sort of trend line where, at one point in time, we had our an FVRR finally, we had our trend line set like this, where we were saying, oh, this was a nice bounce. Well, now we're off this trend line, and actually, looks like we rejected the top end of it. We tried gapping over it, gave it up, but trying to reclaim 35s actually as well. Let's go take a look at FVRR. Into 2670s. Let's say at the strong chart setup right here, I was actually expecting a move down into this 2560, but it gave a nice green move. I'd be surprised if it was able to get below 2650. That would surprise me a lot. And you can see the buying pressure that's coming in the middle of this green candle move. A tight consolidation. Not too much red engulfing. Of course, the initial candle is, but a tight channel. All it would take is for it to, maybe it does trade down a little bit further. But all it would take is a little sideways action. That's where you're going to get a nice green pop. Doesn't need to trade down after that, though. It's about this one, when you're going against strength, this is important to understand that, right now, in my opinion, the shorts have control of this. They've been in control for some time. Here's your negative break on this red engulfing kind of flat bottom break right here. You can see it's building support, and then a flat bottom break right at a negative break of strength. What do? We trade sideways long enough and retest that bottom. There's a couple times where you could be saying, hey, this looks bullish. And then we set a double top into the start of this downtrend. Would be tough to tell at the time, of course, but you would know that you have your previous lows right in here. Couple red candles to the downside, and now it kind of giving another flat bottom break. If this is the support it's trying to hold, you can see huge red move, but no follow through. Does it give that follow through if it breaks it again? Well, that's why we have our built-in support down here at these low 20s, and we've already identified that. We know that's a possibility. So we're sizing accordingly, and we're looking for this green move to eventually turn into a channel break, where I think the move to the upside is legitimate. You know, you could start with the 32, which is the previous lows, 23%. I think that's a reasonable move. That is the plan. Not every time it follows the plan. This Zim does have a green candle move. It is trying to wick into some levels, put in a green candle. The one part I don't like about it is how the red candles get larger. Tight channel. Has some levels to hold. Not much of a trend line. So a catalyst for this to pull back into like a 1250, which was the original neckline break. And we can look at Key. Key Corp, a nice green move off the open. Increased volume off the open. Decreasing volume, but this red candle coming on in is getting some increased red volume. So I don't think I'm out of the woods completely with that one, but let's look and see if we can find something. We got an hour left before the close of the day, or is it 2 hours? Mr. Drift, how we doing, brother? Make sure my volume's even on. It is on. You remember that one time, Drift? I was sitting here on a live stream for about 10-15 minutes and my mic wasn't even on. I'm doing good. We did take a losing trade, and I don't know how it's going to be looking. But we tried the Sound Hound, and we actually got stopped out at 42s. We were trying these 50s, which was the previous high. It had the gap up, filled the gap. And it put this red candle move in. I should have known better with the red engulfing to the downside. But I was giving it, I told myself I was going to give it 10 pennies, but I put the stop in right at support, basically, the previous high down here, and we got wicked out on the money. But, I mean, it's alright. We took a small hit there. That was the only real new trade that we took. We had plug power from last week that we are probably going to try the reload, but we had some good prints, and we had a 90 print. The highs on these two candles went up to 89s. Never got the fill. We got the fill in the middle of this candle, and we were getting ready to go on the ask around 11:10, 11:20. But it came back in. This wicked right back in. So now it's about, we have 51s, 60s, 69s, 81s, 85s, and 90s. If this comes back in and fills this gap, we can think about reloading the position, and we think that we do have some sort of trend line, whether that's set perfectly or not. And if this trend line gives up, we can cut the position. We were playing this over here around this support. I think 10.05 was my best fill. Wish I could tell you we got one off the gap at 10 flat or the trend line, but we didn't take this trade until the middle of this candle. And then we also were trying it in the middle of this candle as well. Trimmed it a few times on Friday. That was when we got back from vacation. And, just respecting some moves to the upside. And we can think about reloading the position. We could put the order in right off that gap and just try it. I think we all did today. My bad, I don't know what you're referring to. Yeah, a lot of everything gave this move in the morning, and it was about being patient and waiting for something that looks good. Shortened day, you know, my thoughts going into the day as it uh, was, the entry was probably last week in a lot of these names, and Rivian's a good example. Kramer was in here asking about Rivian, and he said, it looks good. It does look good, but it doesn't mean that from when you take the entry, for all I know, it needs to pull back into this sort of flat top. It had a flat top here, and you had 2 days to take this trade. It closes here at the flat top. You get the gap up, you put the orders off the gap. So you had a whole day of trading on Friday to take this trade. Now you get this gap up, and it's sitting up another 15%. It's like, how can I take the trade right here when I had 2 days to take the trade here but didn't? So I'm going to give it some time. It has nice increased volume. If it wants to pull back into the middle of this gap, or maybe even down to this flat top, maybe there's something there. Oh, loss? Yeah. Nobody's perfect. If they tell you they're perfect, they're lying. It's about learning from mistakes. So like the SOUN, I mean, I could go back and rewatch the stream. We were live when it stopped us out. When I initially put the stop in, I said, okay, give it 10 pennies. So if I gave it 10 pennies, that would be a 440 stop. I could still be in it, and it would still have a chance. And the reason why we even liked it in the first place is we were saying, okay, candle number 3 off of a green move. Does it need to pull back into these highs? Well, it wicked into it on Friday. We were thinking that maybe this can still give a little bit of a break, but we like this 5 break, so we're looking to get an entry before this 5 break. If it can give it to us, great. If it doesn't, so be it. I do think a trade is there. It's just I'm not going to try it now that I already got stopped out once. Looking elsewhere though, we can keep an eye on this plug, and we can think, uh, holding these 1050s for now, but I don't like the candle it's putting in. If it wants to pull back into this 10 range again, we're all for it down here. If it pulls back into the trend line at 950, that's where we might size in. I don't know. We're gonna see where this one goes, but we got some good trims on the name, and we're gonna stick with that. Kind of like AI. We got the AI trade last week. Wicked in, filled this gap, got rejected, and now putting in this red candle, kind of breaking a sort of trend line that it had. But it did fill the gap. So it had this gap here. We're watching how it would act off this gap. Well, it didn't really act much as of right now. But there is still a potential trend line that it could be trying to build right here. But it's not much of a parallel move. It's actually a cone. So this could be a bearish setup where if it caught a bid off of this and rejected and cracked that, be a flat bottom break. Here's the original entry on the 34, the flat top. Boom. So is the trade going against me with this red move? We could think about reloading it. That's the question that we have. But we're expecting some people to be looking short in the middle of this red move. So if it got into the middle of the red move and these previous lows, we think here at like a 36.25, that 36 flat, we think that it could be a potential short look right there. So if it gives up this trend line, I'm probably just going to cut it and take the green trade. It sucks not cutting everything up here, but that's where the greed comes in a little bit, where can it give a bigger move up to like the top end of this sort of channel it was trading in, up at 39. So it's always in hindsight. But we added quite a few tickers to the watch list. A new one that we added was this in mode, and it wasn't something that I was saying to myself, oh yeah, this is going up today, because it's down 0.5%, a little more. But this is the flat top that I found, and I seen that it also has a nice trend line build right here. So if it were to come into like lower 30s, I think there's a reasonable setup. Is this some sort of flat top that it already tested? Or if this was some sort of of channel. If it pulled back into even like the wick tops right here at 36, it could catch a bid and a breakout. You have clear outs, you have a gap fill, 39s, and if it breaks higher than 39s, which is your previous lows kind of, there's a lot of room that it can run in here, maybe up to like a 50 flat. But a legitimate trend line for sure. Moving along, we can look back at that FVRR. Still holding 2675s. Early entries on this. Trade from last week. A lot of the entries were last week. A lot of tickers out there gave this nice green candle move off the beginning. And here's Key Corp, same story. This is one that we tried that 650 break, and now it's coming back in sort of near my original entry. We have no outs, small size, which is why we have no outs. But it was able to, it looks like we're rejecting these previous lows here, which when it breaks, test it. Now it's testing it again. Can it break over top of this 970? If it can, we think this could be early entries of trying to build some support down here in these nines. So that was key. Yeah, other than that, I mean, Halo. Halo is a new one that we were watching, and it's kind of rejecting, only up 1%. But strength is there. We're looking for this to try and maybe pull back in. If we can get this near 36, maybe there's something there. But we think it's a decent chart setup. Not the perfect setup yet, but it can be. You can see this trend line that Halo has had, and this is why we kind of like the name. So all in all, we actually wanted to kind of go back and retest these highs. So if it stayed in range, 25 could be a level that we could be thinking of. But these upper 29s, the demand right there. So if it pulled back in, does it hold support? So Halo is another one that we were keeping an eye on. And why do we have an eye on it? For a newer company, I guess it's not that new. It's since 2004. I'm going crazy. But pretty good growth that they're projecting right here. Go from 152 up to 199 year over year. It's about a 33% revenue increase, 60 cents a share. For it to have come down from 60 down to 30 in the matter of 3 months or 5 months, we think could be a buying opportunity if it even dropped lower down in the like 25s. In their FVRR. So we never did get that true pullback, but 26.75 with a nice hold right there. And this is what I was talking about. These tight channels, all it's going to take is for it to catch a bid. Does it pull back into this flat top? Now a nice green candle coming on in. That reminds me to look over at Rivian. Rivian getting a nice couple of green candles. So the middle of that green candle would have been a pretty decent try. I wasn't denying the fact that the chart setup looked good. This is actually a pretty good setup for continuation when it doesn't fill that gap, because that's where people short. They can get in short thinking that we're coming back down to the gap, and they get trapped. So when those shorts start getting trapped, that's where definitely money to be made. We do have another play that we've been watching, and we like the way that's setting up today. We're so happy that's starting to wick down, and it has a pretty legitimate case for a channel where if it continues holding this 50, we think it could give a move like 50%. DAL up into the 48. Airlines. You know how long I've been talking about airlines drift. This move in DAL, we're just holding. If it wants to keep going, let it keep going. Hibit's one that we're looking for it to kind of break down. Neckline trade, that's what we're looking for. So we're waiting for that leg down in the 30s. We can trim off 40s if it pulls back in even further down to like the middle of this neckline. That is another part that we could be looking for. I know that's a sloppy chart, but all in all, if you follow my cursor, we can just draw it out. Make a leg down, build a neckline, you double bottom, you extend higher above this left, you get a wave pattern, retrace, you crack the trend line, you shoot down below the wave 1, you retest the bottom of wave 1 and get a further move down to the original test of the neckline. So a lot of times when I see this extended right leg come in, I'll just say, hey, one day there's going to be some sort of news related to it. That's what I'm assuming already, or some sort of drastic change in the business, or there's going to be something that's going to push this down, and it's going to try to get down to this neckline. If it gets down to that neckline, that's where I'm going to try it. So yeah, that was another one, and we got a new. This one is going to be a long-term play, internationally based, and it doesn't really give you too much movement, like in terms of percentage-wise. Like off of these lows to this high was 10%. There's a lot of green candles in there, but a couple things I was able to do was able to fill that gap. So if it pulls back in into these low 20s, we are going to try it. And the reason why we're going to try it, I'll pull this over here. CHKP, consistent growth, consistent. I mean, since 2014, boom, 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 boom. Not any real huge jumps. I guess you could say from 21 to 22 there was a little bit of a jump, but sticking right along with it in Q1. Now the part that we like about it is the shares. They don't pay a dividend, but since that same 2014, their total shares outstanding 188. Year before that 196. Consistently buying back, shortening that pie, decreasing that pie, and look at what the stock price has done since this is back in 2017. You know, it gets as high in 2019, but the stock really hasn't moved. If you take the lows, sure. But even over here at $87, the stock really hasn't given that movement that we're looking for as consistent a growth as this has had. Always good to keep in check the long-term debt, long-term liabilities, about $1 billion. They got 1.6 billion in the bank, so that's already covered just on the cash. And then you look at the cash flow, year after year, bringing in $1 billion of cash flow. Go to the ratios at buyback, consistently buying back about 5%. So over the course of 5 more years, if they continue buying back 5%, they're sitting at how many shares right now? 120. So they buy back 25% over 5 years. That puts us at 90 million shares. If we do some calculations, stock price at 125, market cap 15 billion, we'll say. So if it's valued the same 15 billion dollar company 5 years from now, we can do 15 bill divided by the 90 million shares. There's your premium. Now if it's valued higher than 15 billion, you go to 20 billion divided by 90 million shares, 220. So I think that's a legitimate case for if it eventually breaks higher, and you can see it building this flat top here at 136. So the closer I can get it to 120s, I'm already telling myself, hey, it's about a 14% premium to my breakout level, where if it breaks out and pushes over 150s, I think it's a legitimate chart setup. You have the trend line, you have the channel. Down here near the bottom end of this channel is where I want it. And I already just gave you the reasoning on how it could easily trade up at 170s. Yeah, I think it's a legitimate setup and legitimate financials. So I don't mean to over talk about that. My bad. Let's get back over to it. So looking over at plug, we can see down here at these 1040s now. And earlier when we were talking about this at 1050, the one thing we would not like is if this candle somehow turned red. And why is this candle turning red? Why were we trimming 1090s? That's what you got to ask yourself. 702. You also have built-in resistance, built-in tops right in there. 1090. That is what we did not want to see it start rejecting that 702. But that doesn't mean that it doesn't just pull back into some sort of level, the entry, and then give you some sort of double top into that 702. So that's why we're looking to maybe reload this. But did it fill that gap? Damn close to that 1040. But then you're going to have to worry about shorts. You're going to have to worry about reclaiming 50s. So I think we're just going to hold on to the position. We got the trims that we wanted already. If it cracks this trend line, more than likely, we're going to have some sort of opportunity to maybe buy this trend line, which is a nice ascending channel like that. So if it pulls back in, you know, we're okay. We've taken enough profits on the name to feel comfortable holding it. But other than that, I mean, is there anything that you guys in particular want me to look at? If you had a ticker, this fiver, we never got this pullback into 2650 is what we were looking for. We had an alert set at 27 or 2670. It got alerted. We said, hey, it's a tight descending channel. All it would take is for it to break one way or the other. And now we're above 27. So looking at the daily candle on this, uh, one, we think that we have legitimate catalyst to make a run higher. There's the gap. There's the previous low. We got a request from Drift. CSTR. CSTR V. I'm not sure what the V is. I'm guessing, is it Capstar Financial Holdings? Is that what it is, Drift? You can let me know if that's what we're dealing with. Let me know if that is the correct ticker. I'm gonna click into it right now. Pays a dividend, a little under 4%. Dividend looks like it's covered by the earnings. You put up 30 cents last quarter, put up 47 cents, so the dividend's easily getting covered every quarter. As one start that I like. Looking at the revenue, 30 mil, a little bit decreased revenue, but is that little bit of decreased revenue justified? You know, one thing I do like about this Drift, CryptoStar. I got Capstar Financial. You know, while I'm on this Capstar Financial, I'll make sure I go over to that. TSXV. Okay, I'll go to that. But, you know, this actually is a pretty decent setup. I'm just going to mark this top right here. If this is a left leg, you can see the neckline built right here. The double bottom. You get the extended right leg. Doesn't matter, or I don't care what the catalyst is for the move down. I could have told you back in July, hey, it's possible one day we get this retest of this neckline. And look at where we're at. We're actually at this neckline right now. We trade under it, and now we're trying to set some sort of trend line right there, which also has a nice ascending channel build. So I'm going to add this one to the watch list, and I'm going to keep an eye on it. If it starts catching a bid, I'd say breakout where I would start. And maybe like a 1282 respect into these highs at 13. And maybe hit some reloads. And if it gives me the move through 13, I got a gap fill right there. Um, Uh, but yeah, I'm gonna keep that one on watch. T TSXV. Not really seeing anything. Vancouver Exchange. So CSTR. Crypto Star Corp. Okay, so right here. First thing I'll say, it gets a lot of volume, but this chart is really funky. Looks like let's go into a 15 minute. It's probably not going to look any different. I'm not really sure how to make these candles more defined. Let's go to a weekly chart. It's an interesting little chart. I will say that just going off of strength, since I can see that down here, we are positive strength, and it is sort of building this flat top. But the way that this chart is, it's a little bit funky. It moves in half pennies. So that's why it looks funky right there. You can see down the 2.5. You can see up to 3, 2.5, 3, 3.5, 4. So it's an interesting little setup. I don't know much about them, but I would say if it got over top of this neckline, I wouldn't be surprised to see it, at least attempt up to 5. So maybe there is some potential from 4 cents up to 5. I don't know how easily liquidable it is. I'm not, there could be a catalyst for maybe a channel. I don't know. It's a funky chart. I'm gonna look back at a couple of these real quick. FVR holding 27s. Let's just look at some of the top gainers here. See if we can find some. Rivian Reclaim 19. So a nice green candle here. We did have Opera. I seen Opera was trending. Nice increased volume. It actually paid a dividend too. Interesting. GSIT. Oh, we're on a weekly. Let's get off the weekly. There we go. Yeah, this move Opera's made. Pretty insane move. Kazim, that bounce off of 3 was there. I mean, each time it's come down to this 3. I mean, the bounces this is given off of 3. 30. 20. 26. 25. Is it going to give that bounce? And does it eventually break over top of this sort of flat top? You can see it's setting up this flat top. If it gets back up to there, reclaims 4. I mean, that could easily be a catalyst for some sort of retracement play. Now, it's a deep retracement, but you can see right here, that is the initial flat top right there. So, I mean, you could easily see this catch a jump up to like 7. It's possible. One to keep on watch. We'll go look over at Key Corp. Early entries on this, we're looking for this to eventually give some sort of channel break, but also playing in around this support as well. You can see decent levels dating back quite some time. Earnings 32 cents. Dividend slightly covered. You can see put up 29, covered. 38, covered. So as long as they can continue just putting up these types of numbers, it covers the dividend. We don't see why this support can't catch a bid. If it needs to come in lower, maybe a 9 flat is reasonable. So, but a nice green candle move. Let's go take a look at the 15-minute. You can see all that action right there. Nice bull flag consolidation pattern. If it can eventually give you the breakout, we know that this 970 is this previous low. It's been trading inside of this sort of channel. Now it gave the gap up and hold. Now it's given a move where it's breaking over top of these highs. And now it's holding on top of those highs. So that's what I like to see. Hold on top of the highs. We're going to look back at DocuSign. DocuSign is one that I've been watching. I'm so happy to see it start pulling back in. And we'll look back over at AI as well too. So rejecting the level, but we do like this chart setup that it has. If it pulls back in and gets as close to 50 as it possibly can, that's where we're looking for it. If it gives me a breakdown lower, so be it. I already know my downside risk is probably going to be this gap fill down there. But that's where we are looking to take it. Let's see if there's any big movers, difference movers pack. This was a new one we added. Not quite there yet. Nothing really there either. Any red to greens? No red to greens. See some of these red movers. Nothing too crazy. Nothing that I really see. Maybe Activision. Gap fill up at 86. SOUN still holding these 450s right here. I mean, I'm just gonna kind of just sit back. There's not too much trading left. So by all means, if there's any tickers that any of you guys want to take a look at, more than willing to take a look at them. Match was a new one that we added. Not gonna try it up here, just one that we added. GoDaddy was one that we added. We thought that it's been trading in our range for some time. If it wants to, and we think that there is a potential trend line that's trying to make right here. So if this pulled back into the upper 60s, maybe there's something there. XLE gaps up, fills the gap, continuing the catch a bid, approaching this neckline at 82.50, but also probably some sort of downtrend built in here as well. Now, this reminds me to go back and take a look at end phase. You guys know we've talked about end phase many times. Starting to get rejected, so very close. We are right around that positive break, but this trend line has been legit. Trend line's been legit and has the catalyst for an ascending channel. You can see it right there. Boom. So talking about it down here, I know it's a more expensive stock, but pretty decent setup. We're a lot of green on the year of 2023. This one down significantly, and for what reason? It compounds year over year on this earnings date from 441 million up to 726, so about 80% growth right there. The projected 729 from a year ago of 530. So increase year over year 200 mil. Profit they're expected $1.30. Put up $1.07 last year. Good EPS growth. You can see PayPal continuing to follow this trend line right here. Man, just never got down to that 65. That's where we were on the bid. Never got that fill. But we do have a position. We started building this position at this support up here. Gave it some time to breathe, and we tested 60s a few times, and we actually averaged up a little bit in the 63s. ZI was one that we got alerted on. You can see where we got alerted on. We put it at that break at 26. This is one that we could have tried, and it's where we had the alert, I believe. ZI had a break of 25, the break of 26. Came right back in. Now it's putting in the green candle. Has a catalyst to maybe be a descending channel. But putting a green candle to start right there. But this pulled back into that 26. I think it's a reasonable setup. Maybe asking for a lot for it to come back into 25s in the gap. But I'd say that's probably where your trend line's at. So if it needs to pull back in, maybe the support is where we meet up with that trend line around the 25.25, 25.40, give or take. Veil kind of breaking this. That was sloppy. Kind of breaking and gapped up to that trend line. Getting close to that positive break. 55 cents of EPS, trading at 13.85. This is the wedge pattern. The closer you can get it down here, the better off you're going to be, in my opinion. Key, still continuing to put this nice green candle in. We can think about adding more if we wanted to. A nice sideways action. Could maybe go on the bid at 60s. Does it end up getting rejected? Does it end up being some sort of descending channel? Potentially. As I was saying when you first got in here, Drift, I thought that this roadblocks was the all-in-all better setup. Here's the open candle of the day. Gaps up, fills the gap, puts a consolidation, breaks over top of these highs with this green candle on increased volume. Two nice green candles. And look at that sideways action. And now breaking over that wick high. I'd say it has a legitimate flat top at this 43. If it breaks 43, it's going to make a run for that gap. Or maybe these previous lows. So you got some levels to cut. I would say it's a reasonable setup. This TMC just won't let up. TMC has been on a tear. We're trading this at 130 and we sold it at the end of the day. Why would we do such a thing? Look at the volume. When it takes out the highs, gaps up, couple increased volumes, maybe that's what scared us. But now taking out the highs, getting ready to test the ascending channel, does it need to pull back into the bottom end? COSM continuing the churn. 313 we sit at now. FVR holding 27s. Roku was another one that we added. We think that there is a potential channel that's being made. So the closer it can get to this, it does have a nice flat top break right there. That is your positive break when it gaps up, fills the gap, runs up, falls back down to test it. Buyers come back in. So not a half bad setup there. Look over at you. A little indecision. We're looking for this 2260 gap, meeting in with this support. If it goes against us, we got a gap fill at 21. How about that neckline break? Even shot through these highs right there. Taking a 150 break right now. They report earnings. It's possible that their earnings are already out. Approaching the downtrend. Oil over 71 now. Trying to break over top. You can see the same neckline break as XLE. COSM continuing that churn. 316 now. I see we got 3 people in the that are watching. My bad, headset went out. If you guys got any tickers that you want me to take a look at, I'm just kind of sitting back. I don't think there's really anything I'm gonna do to close out the day. Potentially this 1040 was the low. We could have had an order off of that for a reload, potentially. There's the gap fill. There's the wick low into the bottom end of it.
Went over to see Mom. Sorry to scare you.
All right. So the question here that we have is this going to be a legitimate trend line? More than likely, it looks like it's going to give us a break, but we still have some previous highs that we can go into. That's kind of the flat top break that it had to end the day on Friday, where it gave us the green move. Are the buyers going to be coming in? Orders were there originally. Not the most amount of volume increase. And testing it at the moment, does this need to curl up where it's going to have to fight through 1050s? So it's going to have to fight through 1050s, a whole quarter level. It's going to have to fight through your EMAs, and then you have the break of a 1066, where if this little fall is some sort of retracement, you can see the levels that we're going to have to fight through. So all in all, I think it's reasonable. We had the trims on it already. Do we need to think about liquidating the position? I don't think so. When you get the entry, sometimes the goal is just hold the entry. So this is where we're playing with it at the top of that 10 level. If it pulled against us, I don't think it would be the end of the world. I think you have a legitimate catalyst for some sort of ascending channel right here. So all in all, we think that we can get this move to this upper end. Hasn't quite gotten there yet. But that 702 is the scary. That is the deadly retracement. That's the high that we got up to. So something to keep in mind there. We can look back at AI. AI gave that sort of trend line bounce for now. So even had we tried that trend line or the gap fill, we tried the gap, could have tried the highs, wick, and potentially some sort of trend line here. All 3 of those entries in the money. But that doesn't mean that it's going to be out of the woods. Probably a descending channel. Something like that. So as long as it's trading in this channel, it could be something that ends up going against us. In mode. Key Corp back testing the highs. So that's a beautiful look. We're going to sleep like a baby on that position if it wants to continue churning higher. Now maybe somebody can tell me in the chat, does the market close in 21 minutes or is it an hour and 21 minutes? If it's an hour and 21 minutes, that's a different story. Well, if it's 21 minutes, then you know what? We're probably not going to do anything to the close. So, if anybody, you think it's 1 p.m., so we have an hour and 21 minutes then. Gotcha. All right, well that changes the story. Maybe we can find something. Honestly, I would be okay if you guys just requested tickers and I spent my time looking at your tickers. Because there's nothing that I'm going to be there's probably nothing that I'm going to change with what I'm doing. FVRR, we could think about averaging up, but this is something I'm looking to not really rush into, but I'm okay being patient. Maybe I can get it near this 26 flat, which is where we gap up from, or maybe even 2650. You can see we got close to that 2650. Disney, that's what I like to see. That is a great call up because I was saying earlier on the live stream that Disney looks beautiful. Disney looks beautiful. This neckline break, we were thinking about it. Now, I will disclose that I'm long Disney. Very small size. On the initial positive break back in January, we respected some levels, we reloaded some levels, we reloaded the original entry, we respected some levels, and into the earnings report, we actually dipped into some off of this original support. So we had entries above, we had entry, all my entries are actually above the original price. Is it a green or red trade? Probably red, but we've taken our fair deal of profit. The big problem with Disney is it's not the same company it was uh, years back. The margins just aren't the same, but that doesn't mean there's not potential. We have a descending channel. This is the support. It's got a pretty good support level and around this level. And you looking more closely, you can see we have that third point of contact comes in, gaps down, nice green candle, and now we're breaking through this neckline with a nice green candle. So I do think that you're coming up to this wick high around this 91, and you have this gap fill at 91.5. Let's just clear out the entire chart. Strength getting very close. You test up to that positive strength. This is actually going to be your eventual breakout. If you can break over top of this flat top right here, maybe it has to test up there, and this trend line ends up being some sort of wedge pattern. I would say something like that, where if you can break over top of 94.5, your gap from the earnings is up here at 101. And this could be an eventual start of some sort of ascending channel, hopefully. But I think Disney is a legitimate setup for an early entry. I would be looking not to trade Disney, I'd be looking to swing trade Disney or even punch long. I think down here it could easily catch a bid if it can break this downtrend. Eventually you could even get moves up into these 100s again. Maybe even the top end of this range, which meets in, you have a flat bottom break, hold support, hold support, hold support, break support, retest that, and I think it's possible you can get up into these 125s, 130 range. So talking about it down here, this is a really clean setup. I'm inclined if it pulls back here later on in the week. So trading's off tomorrow. If it pulled back into 90 flat, I think that is a reasonable area that you could dip into this trade. But then you have to understand that if it pulls back in the 88s, I would probably respect it down here at these 88s. So not financial advice by any means, but the big part about this fall here as well is this gap off of 85s was golden. Golden gap. Now the same thing right here. Gap fill, gaps up, retraces all the ways back down. Now we're getting higher lows getting put in, and you're starting to take out a neckline. So I think Disney is a legitimate trade if you're looking to buy into something and hold it. Now that doesn't mean that this trend line doesn't end up giving up, and who knows? We end up trading near the bottom of these wicks, so 80, and you have these upper 70s is also legitimate as well. Where if we're just looking for a gap fill to the downside, 80s are filled. That's filled. If all hell broke loose, I think these low 70s would be the window, and upper 60s. This sort of flat top, and when it breaks it, it retests it. If Disney got down to here, long term, all day. I'm thinking long all day. But that doesn't mean it's going to get down there. This is a pretty clean setup that it has. Strength is getting close. You look at the 15-minute chart. You get the gap down, you fill the gap, you hold sideways, you take out the high on 3 candles, one consolidation candle, and now continuing to take out the highs near this neckline break. Here's your first gap you got to worry about. So I would expect it if you were looking for something just to trade. Maybe you're dealing with options or something. 91 is a good area that you can continue running this up to. So the more I would just continue going off previous highs. So this wick is the high. If it pulled back into there, you can see the green candle. It continues green and it wicks down right into that high. So 90 hold. Not a bad call out on Disney. I like the setup there. Great call out with the Disney. I think you got the right idea and you're looking at the right name. I mean, a percent and 1.3% is nothing to really brag about if you're going equity wise. So if you're buying the equity and not options, that's why I would swing Disney because it has a legitimate case to at least run to the earnings gap. So any entry that you get down here, right now I'd say your premium is 12%, and you could easily run that up to the top end of 110. You could easily run that up to 110 where you're looking at a 10 to 20% premium. I think is a legitimate case. All in all, pretty decent setup. Good call out there. Hmm. How is Rivian doing? Rivian is holding this 19. Does this support hold? Not really much of a catalyst for a descending channel. It actually looks like it's going to take out the highs of the day. Or attempt to. It's a pretty decent setup. The only part that I would say I didn't like about it is the one candle move. I like to see multiple candle moves, and a good example of that would probably be Roblox. Take a look back at Roblox where, I would say pulling back into these previous highs, if you were looking for some sort of trade in the back half of the day, not a terrible setup. It's got up to this 43. It's built this flat top up at 43, so we're still $1.13 off of 43. Wicking into the previous high, you got the increased volume, couple consolidation candles, holding inside of the range, takes out the highs, now wicking into those previous highs. It's a pretty decent setup. Um, I'm gonna go refill my coffee. I'll be right back. If you guys have any other tickers you want me to take a look at, more than willing to share my opinion. Okay, we're back. I see this PLM, just a nice tight consolidating channel, building sort of a wedge pattern probably, but probably an ascending channel right there. Holding this too, if you wanted to, if you wanted some smoke, I would say you could probably punch in and get this at a higher price if it can get over top of this. It could catch a bid. Looking at some daily levels. Ooh, just where it's at. This is why it could catch a bid is because you got some previous lows in here. at 210. If you can get over top of that, 217 is right around the corner in 229. Your true flat bottom break came in at 250. Holds 250s multiple times. It breaks 250, it tries to reject it, then tries to hold. When it breaks it again, it retests it again. So all in all, I think this could give a move up to that flat bottom right there. If it got on top of that, it could even go higher than that potentially. See Roblox continuing to catch a little bit of a bid there. Now let me, I don't know if you're still there, Edgar. My bad. Uh, so I can pronounce that. The reason why I'd say Disney hasn't caught a bid along with some of the other stuff. One, the revenue growth is there. There's no question about that. The question is the margins. It's not really been the same company that it was. You can see from 2014 to 2018, before COVID, that's when they took on a ton of debt. Consistent 45% margins, 25% operating, and now you see these last 3 years. This is the question with Disney. Uh, their margins are increasing. If they can get back up into the double-digit operating margins, which last quarter they actually put up free cash flow positive. But you can see when I go to the balance sheet, this is always the big question: is their debt coverable? Uh, where was I looking? And we'll go look at capital expenditures as well. But you can see from 2014 to 2018, here's their debt, very minimal. Boom, boom, boom. They took on a lot of debt before COVID, and then COVID kind of knocked them down another notch as well. So I always like to match up the debt with the free cash flow of the company. And you can see, we'll go take a look at capital expenditures. Capital expenditures is manageable, and they're pushing more of that capital expenditures towards the media section. So it's when you're looking at that media section, there's a lot of competition. You got Netflix, Warner Brothers, Amazon. There's all kinds of competitors in that streaming space, but there's a lot of potential. So if Disney is one of those final players on that, that's where that long catalyst can come in, and it can help their margins because that media is also gives you good margins as well because it doesn't cost them as much. But looking at the cash flow, you can see they're starting to put. Here's the cash flow that they're putting from 2014 to 18. You can see they're putting a monster cash, and then that huge drop is why the stock, even though it's trading at these same levels over there, right? So we're trading at the same support levels it was back over in this range. Here's 2015 through 2014. The problem is it's not the same company. But if they can get back to the company that Disney once was, that is where it is very promising. That's just my take. In terms of some of the growth, they're putting up tons of revenue. There's no question about the revenue they're putting in. Looking back at the cash flow, you can see getting back to more cash flow. In one quarter they put up 2 billion in cash flow. If they can continue that tailwind, which this is normally when the parks, the theme parks that they have normally start kicking in. So these first quarter and second quarter, more so second quarter, probably is going to be increased from those parks. So I think that they can continue building on and get back to the Disney that they once was. If they can do that, it's no brainer, it's a long. But if they continue putting up low margins, that's where it comes into question a little bit. But all in all, from a charting perspective, this is a solid support level right around this 90 range. And it's continuing to catch a bid. I think you can easily get this up to the 91 and respect the gap if you're looking at a simple trade on the day. But if you're looking to punch long, I think these upper 80s is a good catalyst. If you're looking for the breakout price, 7% premium from the breakout. Previous lows is 10. The gap fills 14. The next gap fills 25%. I think there's a legitimate case that I can get for that. But I've had many people bring up Disney before, and some of them are traders. They more so into like the chart stuff, and the first thing they identify is they say, hey, this is a beautiful support level that's bounced off of, and we're kind of trading under it right now, but that doesn't mean it can't reclaim it. And the thing I always tell them is that, when it was trading over here, it's not the same company that it was. So there's a bull and bear case scenario with Disney, I would say. Let's try and find something that has some volume. How about that? We'll go look at the top volume movers. Rivian, uh, setting days high, it looks like, getting close to it, 1920. The question is, we're right around this gap fill, and it has another gap up here at this 20 range. Now the question with Rivian, I don't know if Kramer's still here, but this is what I told Kramer, is that you had 2 days to kind of play with this flat top right here. 2 trading days that you had. It had the flat top. It had the increased volume. 1, 2, 3 candles on increased volume. I would have probably been looking for a pullback into these wicks somewhere in this range, and it would have never gave me that pullback into 1550. But that's my say, is that, if you're looking to day trade it, probably not a bad idea. If you're looking to swing trade it and get it at a higher price, I think a little patience might be due. If it gives you a red move over the rest of this week, which it might not, it might just keep running higher. But if it did, that's where you can kind of just let it breathe a little bit, give it 3 red candles to the downside, and then see it start building the nice U shape. That is what I like to see. But BAC, also another top volume mover. We've been respecting this trend line on BAC, getting close to that neckline break. This is the same story I was saying. Uh, when you're looking at premiums, you got the gap right there. You got the previous lows at 12%. You got the 16% gap. You got the 22% gap. Up to the highs, 37%. I think it's a reasonable setup. If it goes south on you, this is where we want it. We want it at this neckline and the gap down here. It just never quite got there. Got damn close. But BAC, in terms of the long-term chart, you can see a catalyst for a trend line. Something like that. And something like that. A nice ascending channel. Keep in mind this is a weekly chart. Doesn't need to give one more leg down to this gap fill right there, where that is where we're going to be all over it. Forward, we haven't really talked about forward in a while. Last time we really talked about forward is when we were having some cuts into this 14. It had some gap fills in there, but I think I'm just going to hold this. I think I'm just going to let it go if it wants to go. If it wants to come back in, I'm just going to hold it against me. This is why I kind of like to play around with those trend lines, because you get those nice big moves. And I remember the day I started that position on forward. It was in the middle of this green candle right here, and it went against me right away, and we never panicked. We just respected it. We knew where our out was going to be. We were going to give it all the ways to the bottom, and sometimes it pans out like that, sometimes it doesn't. So forward, I would say this is right in line with the DAL. If this were to catch a bid up to this 1550, I should probably respect it. And then another flat top up at 1650. Hold a piece for the dream move, probably up here at 20s. If it can get to that gap, which is also some sort of flat bottom break, gaps down below it's never tested it. So I think that all in all, it still could be trading around a 30 to 25% premium. AI, this is what I was saying with AI. So what I was saying with AI is that we don't want to paper hand it just because it's going down. Just because the stock price is going down, get the entry. You got the flat top break, gaps down, fills the gap, puts it on radar when it takes out that high. Just a couple tests of 34 can do wonders. We ran it all the ways up to the gap. We had our best out up at 38.09. And we were sitting here saying, do we want to try it off of this gap fill and potential trend line? And we decided not to. And sometimes that's the way it works. I would say you have a descending channel. So if it comes back in to like a 36, we think it's reasonable that it could present, this could be your breakout level around a, build a neckline, set a higher low, come on down, build the higher low, and then your breakout is going to be a 36.50. Home Depot, if you have time, sir. No, oh, of course, of course. What's the ticker for Home Depot? Home Depot, HD. We don't have this on the watch list, which Home Depot is a quality. You know, I would say you have a catalyst for a potential channel. You have a nice uptrend, nice action, sort of building that channel. Now, the first thing I'll say when looking at a new ticker, just from scratch right here, is I want to know where my longs got in, and the way I determine that is based off my strength. I use it off of 50 days of trading on a CCI. And my positive strike, it gives you a couple fake outs right here. But if you have this trend line identified, you don't really panic. You maybe do a couple times. Obviously, it's tough to have this channel put in ahead of time. Keep in mind. Stay with me here, Edgar. But my positive break, you can see this is where I get the nice positive break on two nice green candles. Now, this is a bull setup. You gap up, never fills the gap. Two green candles. It does have increased red volume. But one sec, is my headset still going? Okay, there it is. But this is a bull setup. One consolidation candle now takes out the high. So if somebody was taking this as a bull flag setup, my trade is actually the break of this neckline. So in my opinion, the longs for this name got in around 298 to 300, somewhere in this consolidation. So if the longs are in there, anything above that is profit take. So there's the gap that they're trying to run it to, which if you take this to the downside, it's about $18. If you take that to the upside, $18. You see that? So their risk to reward right in this middle ground, risk reward, that's a 1-to-1. So from where my longs got in, they're looking for that 1-to-1 at 318. So here at 310, your premium to that first out is about 2%. Now I can also see you probably have some sort of uptrend that is a channel, sort of like that. And I would say this neckline is your reload. So if you got the entry around here and you were trimming off 314s and it pulled back into these previous highs, you can see where the wick is. You see that's your buying pressure right there. That's anybody who got this long taking profit, potential new entries, and potential reloads right there. So I would say it's a strong chart. You have a long ways before it could possibly go negative. That would be my take on the chart, is that it's a pretty strong chart setup, and your true breakout is actually going to be over top of this flat top. So all in all, I wouldn't be surprised to see Home Depot trading up here at like a 370, where if it does trade, I'm going to use this retracement, top and move, bottom move. So you can see that breakout level is my half. All I'm going to do is I'm going to respect the levels. My 702 especially. So to my 702, I think a potential run on this could easily give you 20% from the current price, not where the longs got in. And if it wanted to go higher, I'm sure there's a gap. Sure is, right at my last retracement. So I think 385 is potential run if it gets bullish. Now the next question is, it is a dividend stock. You got the entry at 300. You know, that's a beautiful entry. That is a beautiful entry, Edgar. Uh, I'd say you're sitting pretty on it. Now the question that I would have is, you know, it's a not a terrible dividend. It's about 2.4. Maybe I'm off a little bit on my math. About 2.4. Now their EPS from last quarter easily covers that 2% dividend, or that $2 dividend, and their EPS is expected to grow. So let's go pull up some financials on Home Depot. Anytime I'm looking at trying to punch long and swing trade, I want to do quality companies. Home Depot is obviously a quality company. Decent growth, continuing to grow year after year. Starting to decrease a little bit. I'm not too concerned about that. Still a lot of year left. But they are buying back shares quarter after quarter. So my opinion with that is that year after year, since 2014 to now, they've bought back 300 million shares, which is about 26% of the business from this point in time. So about a fourth of the business. Maybe I'm off a little bit. Yeah, a little over a fourth of the business back. So they're returning capital to investors. Gross margins, consistent gross margins, 33%, consistent operating margins. I'm not looking that I'm going to get get a curveball thrown at me from what they're doing. Now I want to make sure that plenty of cash on the sheets, long-term debt of 48 billion. So I want to make sure that cash flow is covered. Now this is if you're looking to go long term, never look at it again and just hold it. Obviously, if you're looking to trade it, you're looking at more levels on the chart. But I want to make sure that that debt is covered by the cash flow. Positive equity, but a little on the lower side, so that's going to play into like the current ratio. The current ratio is still over 1, so you got nothing to worry about. Let's go take a look at that cash flow. We're looking at about 10 billion, at least 10 billion in cash flow annually. And we can see what they did to start off this year. Already to a good start, of 5 billion in cash flow. So their 48 billion in cash is covered in about 5 years. So Home Depot is not going away anytime soon. Consistent business model, and they're buying back shares quarter after quarter. We can go look at that buyback rate. They're buying back about 2% every single year. So over the course of the next 5 years, we're looking for them to buy back another 10% of the business. That puts them at 900 million shares. So we can actually calculate the premium. So if they're at 900 million shares, their current market cap, we'll say it eventually gets up to a 325. So we'll go do 325 divided by the shares that they're going to have. So we'll divide that by, they're going to be at 900 million. That's an estimated share price premium of $50 right now, if it's valued at that. So not only do we have a chart set up where we think that the price can go higher, up into these 360s, 380s, 370s, the premium of what we're looking for in a long-term trade is also there. So a lot of variables that I would say is it's a reasonable setup to continue going higher, and year over year numbers, a little bit decrease in earnings per share and a little bit decrease in revenue. But all in all, I think it's a fundamentally sound company. If you had any questions, I know that was uh, a lot of words, a lot of talk, but I think it's a reasonable setup. And from a 300 entry, if you trimmed 5% of it, I think you could easily reload that 5% if it ever got down to like 305. Or if you were just looking to get in quick, you have a 307 gap right here. So if you have 10 shares or 20 shares and you cut one share, you could rebuy back in at a 307 to 308, and that would be $3 to $4. So 20 shares would equal 10 shares, 6,000 to make 4. Honestly, you're probably better off just holding it long. Don't even worry about it. I think it's a decent chart setup. You have strength on your side. It's got a nice 2 green candle move when it takes out this high. Already wicked into that level. I think you have buyers here at 305. I think it's a reasonable setup. Long term for me, hey, I don't blame you. I think that's a legitimate case for a long term position. Looking at, we'll actually add Home Depot to the watch list. Yeah, what else you got for me, Edgar? I like where your head's at. I like the Disney. I like the Home Depot. I think you have the right idea, especially going long on quality companies and not really worrying about price action as much. Hey, I'm just calling it like I see it, man. Calling it like I see it. I know, puppy. But when I see those early ascending channels, it makes me think of something like a DAL. I thought that this was a pretty legitimate uptrend that it had. You know, you could say that it was something like this, but short term, it definitely had some sort of ascending channel that it was building right here. And we were all over the DAL. So when I see ascending channels like this, you know, I think one long that I've been looking at was Warner Brothers. I think that this setup is a pretty good catalyst for price movement to the upside if it can break this downtrend, of course. One, you got the gap fill at 1750, a catalyst to run higher. You have the previous lows at 1650, which is what it gets to. A nice green move. The retracement on this green move right down to the 702. The action off that 702, and now we're getting this third point of contact right there. If it pulls back in into these low 12s, we are going to be there, and probably right in before this earnings report that isn't going to be the greatest. This one, in terms of short term, they took on a lot of debt. Is it going to be able to pan out? I don't know. I think that the HBO series, the HBO Max, I think there's a lot of potential there as it goes in line with the Disney. So I think not only is Disney setting up for a decent chart setup, I think Warner Brothers as well. Netflix has been really strong, but this one has that early look for that channel as well. I'm swing HD 300 calls. Yeah, I think you were on the money with that, in all honesty. This was the candle I was afraid Plug was going to put in. Does it need to pull back into this trend line? You know, maybe it does. You can see the catalyst for the uptrend. Probably has a downtrend. Sure does. It sure does. And some sort of descending channel, you know, could easily pull back in lower. Easily pull back in lower. Looking back at AI, starting to get rejected a little bit. This is what we wanted to see. Look at the 15-minute and see rejecting the channel. Now, do we come back down here and set some sort of higher low? Now on this green move, not the most amount of volume compared to what it was trading earlier. So whenever I get multiple candle moves to the downside like this, sometimes I just flip it to a higher chart frame. You can see if this was upside down chart, I would be looking at this as a short opportunity. You got the three red candles following, finishing with a red engulfing candle. Now 1, 2, this is candle number 3. If this was upside down, this candle would be starting to turn green, and I would be feeling really good as it pulled into that level. And now I'd be looking for this to build some sort of continuation. And now does it break this trend line? Now if this trend line holds, that's your breakout price at like this 36.50, give or take. Uh, so we are keeping our eyes on this AI. We think that the potential is there. It filled this gap. If it can get back over 38, we think that it has a nice catalyst to go for maybe a 42 push. You know, we'll start with top end of the channel, of course, but I think the setup is definitely there. Looking at the top movers, this PLM, not really giving too much movement on this name, but is it some sort of channel? You know, I'd say this is sort of the nut up or shut up area right here. If it cracks this, are you going to trust 185s to hold? I don't know if I would. TMC, man, this name just. You remember when we were trading this drift back down those 120s, 130s? Yeah, that's a damn shame. Key Corp rejecting, setting up a flat top. You know, if it were to break down, could be something like that. But I think if it pulls back down into these 950s, we're going to add some more of it. It's held pretty good up at this level. It doesn't really have an uptrend, so we'd basically just be counting on it to set some sort of higher low. If it was something like that, no, that doesn't really match up. I don't know, we need more chart information on this for sure. I'm going to bounce around through a ton of tickers here. Roblox not given a half bad setup to run for that 43. I'd say you probably have some sort of trend line trying to be made for right now. Nothing crazy yet. Look at Hall X. Look at the daily here. Look over at CF. CF, a nice green candle move today. In this sort of tight descending channel, we've seen last week that it was starting to break over top of that, but still holding here. You have the positive break on strength on an increased volume when it breaks that channel. Now pulling back in and continuing to hold these previous highs right here isn't a half bad look. Does it need to just continue trading sideways, and is this 7150 an eventual breakout for the name? So we are keeping an eye on CF and also this Halo play. Man, I just want it to come back down. You know, really, it's not a half bad setup. Sort of wicking into the previous high. Can it build a U shape and break over top of 3750? Maybe. But a nice uptrend on the name and sort of an ascending channel as well, which we're near that top end of the channel. And looking back at Disney, you can see testing those the first initial low right there, making a nice push, a nice green candle move. Looks very good. And I think that up to these 91s today look good. I think it gets at least taps 91s today. And this will be a potential gap up catalyst for tomorrow, or what would that be? Wednesday? Okay, if it can fill that gap by the end of the day, and then maybe it trades down a little bit. Maybe it needs to pull back into these tops again before it goes. But if it fills that gap and closes above that, potential gap up, fill the gap, and make a run for this flat top right here by the end of the week. Not out of the question. You could easily see 94s printing here this week. CLF, I forgot about Cleveland Cliffs. This was one that we built into a couple times. We tried it on this day. We also tried it off the gap. And we also we were on the bid at 1550, never came in. So we have a couple entries, and we've just kind of just been hanging out with this. The strength never went against me, which is why I felt pretty comfortable. But obviously, looking back, it's easy to be comfortable after seeing the nice green move. We're just waiting to see if this can break over top of these highs. If it needs to set up this sort of flat top before it does it, we're all for it. But let's see if that trend line can hold right there. Nice strength on the name. Not bad. We are going to go look over at Etsy. Etsy, we're waiting for this 82 gap right here. If Etsy can do that, we think that it has some sort of trend line, long-term trend line potentially. Is it perfectly set? Probably not. Top end, you know, it's asking a lot that to say, oh yeah, this is going to be the bottom and we're going to get a move up to 500. I would say that's unlikely. But I've definitely seen crazier things happen in the market. So if this is some sort of uptrend on a long-term basis, and we got some gaps here that have gotten some action, Direct correlation off that gap, and that's where it gapped up from. We think that this 82 could be something there. Allison, continuing the churn. We're just holding. New all-time highs day after day. Man, I wish I loaded up more. But this was a perfect example of identify the downtrend, identify the uptrend. Now, I wish I could sit here and say, oh yeah, we were loading this up in the low 30s. No, we weren't. But we were picking it up when it broke this downtrend, and we were picking it up on this flat top, and we were trimming it all the way through this. We're still holding the piece, but that is the moves that we're looking for right there. If I can identify more of those, I will be a happy camper. And the first one that comes to my mind, Edward, one sec, I can't see. I have 340 for August on Burke B. Let's go take a look at Burke B. You know Uncle Warren is the GOAT. Uncle Warren is the GOAT. Burke B. Is that what? There we are. I'm not sure what. Oh, here it is. Burke B. 340 call. I think you're sitting pretty. Got the earnings coming up. You have strength. You have an uptrend. Maybe a channel. Maybe a wedge pattern. You have this sort of ascending wedge pattern right here. And I would say fighting below, near these lows right here. If this is one big retracement, it looks like it's fought through them already, personally. We're on that sort of last retracement right there. So you can see the action all the ways up. 702, 702, holds the 702, rejects, and we're kind of right around that range right there. See if there's any gaps. Looks like we do have one tiny gap, a sneaky gap right there at 143s. Our 343s hasn't quite got there yet, but I like this setup. This is a bull setup right here. Now I know I'm saying that when it's made a move like this already, but when you get two nice green candles, now why I say it's nice is full green engulfing and more buying than selling. You see the body of this candle exceeds that wick, and it's right around this flat top right here. So it's just rejecting this last little bit, which is that last retracement, but it gaps up, doesn't have the weakness to fill that gap. It tries to. It tries to break down below 38, but the buyers are there. All it's going to take is for us to catch a little bit of a bid, and I would expect 343 gap to have a little bit of selling, but that doesn't mean it can't fight through that. Could easily be setting up a run for a all-time high. Yeah, I would again say 12% so far. Hey, you compound 12% over the course of your entire life, you're a rich man. So to take 12% on something, that's good. That's fantastic, actually. Some people are lucky to get 12% a year. You know that, Edgar? Keep that in mind. Some people are lucky to get 12% a year. Looking around. I'm gonna keep bouncing around. I like this DocuSign play if it can continue rejecting. I love that it has that wick right there. I want it as close to 50 as possible. It doesn't mean that it's a sure thing, but I like this sort of chart setup that it has. This third point of contact was legit. 1, 2, 3. Now that fourth one in, that's the one that we're looking for. Didn't have it on radar, but now I do. If it holds this 50, this is setting up that breakout here at this neckline right here, which is kind of these previous lows. So early entry, which strength is very close as well. So if we pull back in, get to curl and then reclaims positive. So if we get a 50-50 to my first breakout level, 4 to 5%, I think we can get top end of the channel. The reason that it put it on the map is this gap right here. You can see this gap on the earnings date, which they put up, on a cash flow basis, very, very good EPS. On a net basis, they're not quite there yet, but that's part of the reason why it's been hammered down, in my opinion. Now we look at the year-over-year numbers, 588 to 661, projected 680, give or take, from 620. So compounding on a free cash flow basis, high margin. If they can continue growing at, what is that? Let's just go take a look at it. Why not? Quarterly, 12%, annual, decreased. Notable decrease right there, but still growing consistently, in my opinion. Shares outstanding, you're dealing with a little bit of share dilution, which adds to the point that, the stock price in 2020, 2021, probably a little bit overpriced, but you can see the early signs of slow dilution. Not as much, but then they went ahead and year over year 4%. The part that is the growth catalyst is this high margin. It's a high margin business. Operating and profits just not there, but that free cash flow margin, if they can continue putting up free cash flow like that, not half bad. We look at the balance sheet, understand the debt, 141 million in debt. Their cash alone covers that, almost tenfold. Decent. What was I looking at? Current ratio about a 1.6. Nice shareholder equity. You can go look at that current ratio. 0.8. Maybe my math's off a little bit. Cash flow, annual, 440 million, 430 million. Long-term debt of only 141. It's covered. The only thing that's stopping this company is the share dilution. If they can just hold a seat at the table, this could be a catalyst of something that is brewing. Does it need to pull back into the low 40s? It very well might need to, which that's where your support is at, down here in these low 40s, which was a neckline. Left leg, double bottom, builds this initial neckline, which caught a bid. The neckline caught a bid. What was that run? 30%. Started this trend line, which is your support, 60%. Now we're building this sort of uptrend. If this got into the top end of the channel, I think there's definitely potential there. If it were to run to the 87 gap, yeah, I don't know if it's going to have that moving in tie. That's going to be a long ways away. I think there's potential. I'm going to keep my eyes on that one. Look back at you. This is the one that has been red on the day. I'm interested around this 2250, 2260. Nice support held consistently. If it catches a bid to the downside, I'd say 21 gap is reasonable. Probably has some sort of downtrend. It's going to need the fight. Uh, 30 minutes left on the day. Probably not going to be any new trades that we take, just kind of analyzing, making sure that we're prepared for the rest of the week. We have a whole day tomorrow that we can really map out and see what we want to take. But with a short day like this, we weren't really rushing to anything. We tried that Sound Hound. Probably shouldn't have. But we were a little bit disappointed in Halo. This was one of the trades I wanted to take a chance on today. And had I around this 36 flat, it would have been gold to continue holding. But still rejecting the top end of the channel. So that's worth mentioning. Disney, did it get up to those 91s? Did it get there? Damn close. High of the day, 90.95, which is the wick low from the original gap down. So if it doesn't fill this gap today,
We are definitely probably going to be trying this around this 80, 89 to 90, 89 3/4 to 90, right in the middle of this green candle move. Getting close to that positive break, but we can easily have outs at this 91.30 gap, which the gap's officially at 91.32. Is the day done, Drift? Oh no, the day's not done yet. I see Disney just moved at least. Or is it done right here at 11:30? Did we get a close? Just about. Oh, I can see it right here. 30 minutes left on the day. Okay, I can see. Okay, gotcha. Yeah, I mean, we're not going to be taking anything back half of the day unless I'm feeling really frisky or I see something that just looks excellent. But looking over at the top movers on the day, I can see this PLM just held kind of sideways. It is a green candle, which anytime I get these big gap ups like this and they leave a green candle like this, the first thing that's going to come to my head is what if it gaps up through this resistance? So it's resisting these lows right here. You can see these lows and highs. That's the wick high of the day. If it were to gap up above that, who's to say that it doesn't run through 217 and make a run up to like 250? So if it gapped up to like 220, puts a green candle, wicks the bottom end, and then leaves like a half green candle with a wick of selling. And then, from there, who's to say it doesn't gap up above 280s? Now, when it puts that gap up and it shows me that red candle, who's to say that this doesn't gap down and run down and eventually retrace all the ways down to the original gap? This is where it's going one day. Right there. Mark it. 80 cents. It's going there one day. And from 80 cents, who's to say it doesn't go lower? But does it need to run higher before we retrace back down? Now, I don't know what the news catalyst is for this company. Uh, but a lot of times when I get these big gap ups, I like playing them a week. I'm afraid to sell my Tesla shares. I believe Tesla can go to 400 next year. I'm still doing my homework. Tesla is just one of those that I just can't get a read on. That's what my chart looks like. It makes no sense. Um, I would say the problem I have with Tesla is the valuation just a little bit. Now, I know it's a premium. I know they're ahead of the game. And maybe they can turn it around. Or I guess I shouldn't say turn it around. But the problem that I would say that I am worried about is the margin wise. Now, Tesla, they are fantastic margins for a car company. You compare Tesla's margins to Ford, they blow them out of the water. The question is decreasing, 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 decreasing. If it continues to decrease, that would be a little bit of concern. The other part is the share dilution. I think Tesla knows that they can dilute some shares, which helps them continue to grow. Maybe it does go to 400. I don't know. Personally, the way I play Tesla, Edgar, is I just hold it in ETFs. So VT, this is my ETF that I'll probably be holding for the entirety of my life. Has 2% in Tesla. And the reason why VT is my go-to is because it's got 9,600 different holdings. VXUS is the other one that I trade, where VT 60% United States, 40% international, and VXUS is the 90% international and 10% United States. My goal with the two ETFs is that I hold the entire world's economy. So the way I look at it is I'm a young cat, a young guy. I think that by the time I want to retire, I think the world's economy is going to be better. And if I look at VT and VXUS as the world's economy, I look at it as a no-brainer. So if I have a company that maybe I'm not getting a good read on, like Tesla is a perfect example. I think if we date back to this 191 break, This is where I was saying down here, let's start down here. I was saying right here, wait for the 125 break, which is right around that positive break, which was this sort of top. Well, it gave the gap up, and this is that bull setup I like. Nice green candle, gaps up, never fills the gap. That's a setup that I like. I never traded it. It ran all the ways up here. I said, here's your previous lows. It's going to reject them. Now, we're going to come down to the earnings gap, is what I said. Never quite got there. It had the descending channel. Now, I was sitting here saying, at the 191 break, wait for a 191 break. There's your 191 break. You get the gap up, same story. Never fills the gap. So I missed out on it twice. So maybe I just have a grudge against Tesla. Well, now it's run up, and I was sitting there saying, oh, 265, right at this gap fill. You use the retracement. It's right around your retracement levels as well. 265, it's not pushing higher than that. And now we're getting a gap up through that where, this is looking bullish. It could easily run up to 312 and actually make an attempt at running for all-time high. So I agree with the 400. It could easily run there. The question that I have is this some sort of start to a descending channel? Or if you map these lows, map the highs, are we near a high? And with the share dilution, the other big negative that I have with Tesla, and I'm not trying to just harp on Tesla here, so bear with me, because obviously this move is no joke. This move in a large cap like this is damn impressive. So more than likely there's probably something that I'm missing. But that's where I hold it in my VT index. There's something that I'm missing, but I still hold it. I try to hold everything. My goal is to hold everything in the world. So I'm going to have stuff that goes down. I'm going to have stuff that goes up. If I don't get a read on something, and without question, the growth. Look at the growth that Tesla's been able to hold. If they can continue growing at 50%, no question. No question that Tesla is probably valued properly. But as you get bigger, it's harder to grow. Are they going to be able to sustain 50% growth? I don't know. Maybe they are. But the other part that I have not been a fan of is the share-based compensation. So the insiders, they're reaping in benefits of these shares. Just in the last quarter, 418 million in shares to their employees. That's a lot of share-based compensation, and that's where the share dilution's at. So if they continue diluting at 5%, market cap of, let's say they find a middle ground in the middle of this. If they have a market cap of 750 million and they issued 25% shares over the next 5 years, which is reasonable, 25% share dilution, that puts them at a total share count of 3.8 billion, give or take. Give or take. Bear with me on this. 3.8 billion. What's the market cap we're looking for? 750 trillion divided by 3.8 billion. That puts the share price at 197. So if they continue diluting at that and it's valued around that type of market cap, bear with me, I think that it's potential that it could be a little overvalued. So that's where I don't really have full conviction on what I think this could do. I think it's kind of a crapshoot. Now, my theory on how stuff goes up. So let's look at a particular day. Let's look at right here. If more people want to buy, let's say the stock is trading at 166, Edgar. If more people buy at 166 than sell, the price is going to go up. So all this move to me is more people wanted to buy. No question about it. Now, when more people want to sell, what happens to it? From where the longs got in, here's your break of about a 191. Your longs are 45% in the money. From this long break, it is about a 138. 50% in the money. So for the longs, for looking for a reload, I'd say probably a 217 is like a reload spot off this previous high, which was also a support level right in here. So I'd look for like a 220 to 210 is what a reload would be looking for. Now, just because Tesla is risky. Yes. Yes. So that's why I just don't really mess with it. I've missed it twice, and both of my call-outs with this name. I called for a 125. I never got it. Never got the 125. Kicked myself all the ways on this whole run. I was like, man, why didn't I get it? And I did the same exact thing. I said 191. If it gets over that 191, let's try it. Did it, and now it's sitting up at 277. So maybe it's one that when I get a feeling on it has a decent chart set up, just pull the trigger if it's off by a couple bucks, because Tesla can move. But up here, it's if they continue diluting at 5%, I'm not interested at getting diluted unless it's reasonable. So like the FVRR trade that I've been talking about, right? It's sitting up, it's catching a nice bid. Okay, we got a couple entries in the mid 26s and a couple at 26 flat, one under 25, or one under 26. Uh, they have some share dilution. But let's go take a look at FVRR, and I'll show you a good example of what I'm looking for if they are diluting shares. Is one, they're a newer company. Two, you can see the share dilution right here. So in 2019, 200%, 57%, 11%. Okay, now only 2%. Looking at that first quarter, okay, still averaging about that 2% share dilution right here, year over year. But the big thing that I like about it is with the newer company, we go look at when they were diluting all those shares, to me it's not fairly priced. But now it's starting to decrease in share dilution. We're coming into some levels. Is it a fundamentally sound company? Massive growth from 2020 to 2021. Obviously, it's in that freelancing space. But for it to continue holding that growth, I think is all right. If they can continue just growing slowly, I'm okay with it. With how beaten up the stock has gotten, still only 38 million shares, but high margin. Uh, so the cost of goods sold for every 82 cents, only 18 cents of this is going to its cost of goods sold. The other 82 cents for each dollar of revenue is going to their expenses. So operating, they're not quite there yet. Profit, they're not quite there yet. But their free cash flow, on a bottom end basis, they're bringing in free cash flow. So as long as they continue bringing in free cash flow, I'm okay with that. We go over to the balance sheet, and you can see we had about 463 million on the books, or 464 million on the books. Long-term debt, their cash has covered their long-term debt just about even. So that's why I say if you're looking to build something long, I'm interested in these high margin companies because they can compound and compound and compound and eventually get to a point where they're consistently profitable. So that's why we've dipped into that a little bit. But then you got to match up that debt with its free cash flow. So looking at the free cash flow, the free cash flow is not there yet. If they can get to a point where they're bringing in more free cash flow, 13 million in Q1, if they can match 13 million throughout 4 quarters, that's about 50 million, 52 million in cash flow. 52 million in cash flow covers their long-term debt in 10 years, give or take, 8 to 10 years. So it's early. So when I'm looking at the topic of the matter was share dilution. If I'm looking at a company that's doing share dilution, I want to make sure that I'm getting a fair value for that company. Now comparing Fiverr to Tesla, I mean, I think we can agree that it's probably not a fair comparison. Now, if I'm looking at, like I was talking to Drift earlier about that checkpoint software. This is where I go into calculating, the shares from 2014. They've averaged about a buyback ratio of about 5% on average. So if I calculate over 5 years, they're going to buy back 25% of the business. They're sitting at 120 shares right now. So in 5 years, we're looking at them to buy back a fourth of the company, sitting at 90 million shares. If their market cap is valued at this same 15 billion that it's been over the last however long, since 2015, it's been at least 15 billion. If they're at least 15 billion, we can calculate that in. 15 billion divided by 90 million shares at a share price of 166 at 90 million shares. You look at the stock price of CHKP, sitting down here at 126. I really wanted to see this come into these low 20s. Personally, wanted to see it come into these low 20s. But for a premium up to 166 from current stock price, 166, 33% premium. Now that goes into the matter of consistency, where as Tesla, I don't know what Tesla's going to do. Checkpoint, I can pretty much count on Checkpoint to grow at about 4 to 5%. I would say that's reasonable right here, and already on this Q1, about 4% growth. So I like the consistency in revenue. I like the consistency of buying back shares. Margins, high margin company, operates at 37%, decreasing a little bit, so a little bit of a red flag there, but high margin company. That's what I'm looking for. Now I go over to the debt. Long-term liabilities of about a bill. They have 1.6 bill in the bank, and the cash flow. Since 2016, they've put up about a bill in cash flow, so that covers their long-term debts. So not much debt. They're making a few acquisitions, so it could be something that you could go look into. Over the last 5 years, they've made acquisitions every single year, and they do have a little bit of share-based compensation as well. Uh, it is notable that this is where share dilution comes from, but the company itself is able to cancel out that share-based compensation and then buy some more shares on top of that. So a fundamentally sound company. And current ratio is fine, but they also return and invest capital very well, helping that EPS. So the EPS expected to grow as they're buying back more shares and staying as a consistent basis. Now the question is, when does this market cap kind of not trade at 15 billion and it trades at like a 20 billion in market cap? So we can go calculate that. We go 20 billion divided by the 90 million shares we're expected 5 years from now. We're looking at a share price of about $220. So looking at the share price down here, and we run this up to 220, over the next 5 years, it could potentially be trading at a 75% discount. That's what I'm trying to find when I'm looking at a long-term investment right there. Now maybe I'm just talking crazy. It's possible. For all I know, Checkpoint software runs down and we test back down into 88 bucks. Well, then in my eyes, if they continue buying back 5% of their shares quarter after quarter, you know, I still think that premium is there from 88 bucks. If that's your backup, you give this trend line low 20s, you respect 115, you respect 110s, respect 100, respect the previous highs down to 90. I think there's no way over the course of 10-year span, if they continue to grow 5 to 6%, 4 to 6% every single year, and they continue to buy back 5% of their shares outstanding quarter after quarter, and continue to put up high 80% margins, 37% operating margins. I just don't see how it's possible. So my focus in long-term plays is all about the margins. And a good example would be CrowdStrike. CrowdStrike, they got some share dilution. They're not buying back a ton of shares, but high margin, operating and profit margin is not quite there yet. But the free cash flow margin, look at that 30% free cash flow margin. Look at the balance sheet, long-term debt, 2.7 bill in the bank covers their long-term debt. You go look at the cash flow. They're putting up 700 million in cash flow in 2022 and growing. Cash flow is growing year after year after year. I expect that to continue to grow. Look at the ratio, current ratio, check. They don't really invest their money very well, but they're still not profitable. They're only free cash flow profitable. And there's that share dilution. So they're diluting shares, but the compounding revenue matched with the margins is what I'm looking for. And when they're free cash flow positive, all they need to do is continue growing. So instead of focusing on being operating profit, they're reinvesting more of that cash flow into the business to become a larger business. That's where you get that revenue growth. So, looking at the chart of CrowdStrike, this was my one regret, is not loading up more. We identified a descending channel coming into the previous highs around a 100 flat. I just expected it to get rejected off this gap more. Right off that gap, ran it to the gap, wanted to get it back down around my 100 entry, never came in. I mean, we still got a piece. We'd be crazy not to have a piece breaking this downtrend. But if you can find the gems in the rough that have those high margins, they're free cash flow positive, maybe there's a little bit of share dilution, these are the moves that you can get. So one thing that I do to scan for that is I just use a stock screener. We can go do this live right here if we wanted to. I know we got 10 minutes left of trading. But first thing I'm going to do, I want it to have a little bit of volume. I want the market cap to be, I only get 300 million and 2 billion. So we got our volume checked. 500,000 in volume. Now next thing we're going to do, we're just going to type in margin. Gross margin above, let's do 40%. If you can show me a business, if you can present a business to me that can put up over 40% margins, I think it's a fantastic business. So we'll do 40%. Free cash flow margin, we just want them to be bringing in free cash flow. So we want to see above zero. Above zero. Now already with these filters put in, we have barely any of them. Free cash flow above zero, 40% margins, and it has volume. You're already down to 189 tickers right there. Go look through that list, find yourself some gems. I guarantee you. Now, I should never say guarantee or take it as financial advice for anybody. But I bet my bottom dollar that there is a great long-term investment in this list somewhere. Somewhere in that list, there is a great long-term investment. Now, if you also wanted to jump in and say, hey, I want them to pay a dividend, let's just go to dividends, dividend yields. You could say above 1%. Boom, 83 tickers. You have 83 high margin companies that are paying a dividend and also get traded volume. Now, if you wanted to say, no, I don't want a dividend, I want companies that actually don't pay a dividend, we go over to dividend per share equal 0. Boom, 86 tickers that don't pay a dividend. They bring in free cash flow. They're probably using that free cash flow to buy back shares. And look at these companies. These are top quality companies right here. Boom, Google, Meta. I mean, Meta was the gem of the year. Can we all agree that Meta was a gem this year? Not this year, but since last year. You want to go do a breakdown on Meta's financials? Let's go do it. Look at that revenue growth. Boom, 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 boom. The year that it breaks out and does a massive move to the downside, everyone panicked on this revenue decline. But look at the shares. Buying back shares. Bought back shares, shares. Buying back shares. They're using free cash flow to buy back shares. High margin company. High operating. High profit. Now the big knock that Meta got is their increase in capital expenditures. People panicked when they increased their capital expenditures from 18 billion to 31 billion, like they couldn't afford it. Look at the cash flow the company is bringing in. Look at this cash flow the company is bringing in quarter after quarter after quarter. Let's go look at their long-term debt. Only 25 billion in long-term debt. That's covered. A year of cash flow. But no, it's a huge panic that they increase their capital expenditures a little bit. I mean, this is the point that I'm trying to make to you guys. You'll look at their return on invested capital, flawless. I mean, this is a flawless company. And for it to have traded all the ways from 300 and 400 bucks all the ways down to 84 bucks is absolute insanity. But that's what I'm telling you guys. Go to this screener. I put in barely any filters at all. Top quality companies just like that. There's bangers in on both of those that you're watching. So that's what I'm looking for in terms of a long-term investment. I know, Edgar, when I start talking, Drift will tell you. When I get talking, there's no stopping me. If I have an audience that, I think you might not even be listening whatsoever. when I have an audience that I think is listening, there's no stopping me. But I'll leave it at that. In terms of the original talk was Tesla, and I will say that I'm not going to take any credit from Tesla. Tesla, looking at the margins that Tesla has, yes, they're decreasing. Yes, they're decreasing, but the margins are fantastic. You go look at Tesla to Ford. Ford's margins 10%, 3% operating, a little bit of profit. Tesla's margins blow them out of the water. It's not even close. So that's where, maybe you have a lower than 40% margin company, but the industry they're trading at a premium compared to the industry. Maybe they have higher margins than what the industry does. There is also negatives with high margin companies. Now you might be scratching your head when I say that. The reason why there's negatives with high margin companies is because when you have a high margin business model, you're going to have a higher competition or a higher flood of people trying to get into that high margin business, and especially if that high margin business has no barriers to entry, like a low startup cost. Well, then you're going to have a flood of competition, and then it's about finding the companies that are going to be able to last for the long term. So finding those companies that high margin, bringing in cash flow, don't have much debt, those you match those three things together and you can get massive increases in price. You're here still? He says laugh out loud. Yeah, when I get talking, Edgar, I there's no stopping me. The market's open and I'm sitting in a bunch of trades, sitting in a bunch of swing trades. I haven't looked at a single one yet. But that's the thing. The part of what I try to do, I try to get the entry, trim some levels on the way up, and hold a piece for the dream. That's the saying I always go to. Trim the levels, hold a piece for the dream. And just sometimes it's hard to identify the levels that you want to buy, and sometimes it's hard to identify the levels you want to sell. I always just go based off of, the level. I don't really get too much into moving averages or anything like that. If I get the conviction on a company that I think it's fairly priced and I think there's a catalyst that it could be priced higher, and let's say there's I go with trend line. So like right here, there's a clear downtrend right here. Well, what happens if somebody goes in short? Somebody says, "Oh, I'm shorting this downtrend," and it works for them originally, but then it later on there's a day where that guy who goes short off that trend line is now out of the money. I'm looking for that early entry, and a lot of times it's going to happen at this strength. So I always say the big players are at the middle. The I look at strength as the house at the casino. Uh, the house at the casino, majority of the time, is going to win, but they do not win every time. They do not win every time. So when strength is negative, I'd say the house is in favor of the short. When strength is positive, I'd say the house is in favor of the long. But you can see the house doesn't always win. If you were punching long saying, hey, positive strength right here, we're going to get a higher price, boom, stopped out. And you took a losing trade. Alright, so my goal is to find those areas where, the house is going to be wrong. So if I'm buying this company at negative strength, I'm betting against the house. And if I get a break right here of like a 31 and we get a positive break, well, now my entry that I got against the house is now in favor of the house. If that makes sense. I know that's a wild theory, but I mean, this Warner Bros. Was a perfect example. If I wasn't on vacation last week, I'd probably have an entry sometime off of this. But I mean, this is a beautiful setup to start off, and I'm sure if I go over to Disney, it's going to look the same. Not the same chart setup, but I mean, you get a nice move. Where's your positive break? Right in around here somewhere, around an 11. Where do we fall to? Right to our original positive break. Right to the original positive break, which, you have some levels that you can trade. You have a gap fill. Boom. Direct correlation right off that wick. Boom, betting against strength. Well, now look at this setup. Use the retracement, use that move. The same way I look at the 702 as deadly to the upside, I look at that 702 as deadly to the downside too. Boom, 702 gives you a pop. Now we're setting in a higher low, building this trend line. You have a catalyst for a move. You have an ascending channel. You have a gap fill at 1750, and you have your previous lows up here at 20s. Boom, there's your flat bottom break. Give or take. And you could even say this low right there was a flat bottom break. Hold, break down. One day we're going to retest that. The question is with Warner Bros. Is the debt. They have too much debt, and they're not bringing in the cash flow. Mr. Drift, happy 4th of July to you. I hope to see you back here on Wednesday. I hope to see you back here. We'll be here ready to go, and I'm going to have some trades ready to go. And we'll be given, like this trip, we identified that gap that I wasn't able to do. Looking for that. Down 15s. Kazem off 3 has been absolute gold. Yeah, nothing else that I'm really watching. Edgar, I don't know if you're new to the channel, but you brought in some good company. I was happy to have you here on the live stream today. This key corp around this 950 is going to be a level that I probably try to work a little bit. Has a catalyst to get down there. How does it act at 950? We'll be watching it. But yeah, that's a close of the market. We still look like we have some. So let's look at the top movers for the day. TMC, absolute tear. Yeah, there's so many variables that go into a setup. Like when you think you're getting a positive break, you got a bull flag setup. This increased volume when it takes out the highs exceeds the previous move. Beautiful example of a continuation. 2 green candles with a gap that never gets filled. That's a bull setup. You ever see that setup? Keep an eye on it because that is a bull setup right there. And this continuation running up to the top end of the channel we had set from the beginning of the day, or for a long time now. Yeah, this is why I like playing with these ascending channels right there. If you catch them at the right time, there's a lot of money to be made. That's a 200% move in a matter of a month. But other than that, that is going to call it for the live stream today. I appreciate everyone for tuning in, and we will be back here on Wednesday. You have a great day too.